Welcome to Beyond the Press Release, a production of Agoracom, in which we take the time to speak with small cap executives right after they put out important news. And this guy keeps putting out important news almost every day now. I've become his personal assistant. It's Peter Pascali, President CEO, PyroGenesis Canada, trades in the TSX on the stock symbol PYR. And for our friends in the US, PYRNF. And by the way, for all of you, happy Thanksgiving and happy Thanksgiving long weekend with your families. For those of you new, it's going to be a lot of you. PyroGenesis is a newly uplisted TSX company. They're pretty much the world leader in advanced plasma processes, and that means they're achieving global success in multiple applications with some of the world's biggest companies and organizations. For example, they announced a $25 million contract to supply one of the biggest high-tech aluminum smelters in the world, an $11.5 million contract to supply their technology to two U.S. Navy aircraft carriers. And just yesterday, they announced the signing of an initial plasma torch contract with a major iron ore producer. So the company's hitting on all cylinders. But what we're talking about today, Q3 results. I'm going to read it out, the headline. PyroGenesis announces Q3 results. Revenues 8.1 mil. Net income 15.3 million. Gross margin, I'm going to talk about that. Let's call that 68%. Current backlog 36.5 million. All whittles down to basic earnings per share of 10 cents for the quarter. Peter, welcome back.
Thanks a lot, George. Thanks a lot for that introduction. Appreciate it.
Hey, you make it easy. You make it easy. Before we dive into the numbers, because I know you really want everyone to take a closer look at these numbers and get out even more morsels of information. You call this in your quote this quarter historical. So before we go to the numbers, bigger picture, I mean, I'm seeing records across the board. How historic? How do you guys feel?
We're very proud. We've been very proud of this, Georgia. But it comes a bit of a surprise to the marketplace. But we've been signaling what our backlog is. We've been talking about percent completion, so it shouldn't be too much of a surprise to people. But yeah, no, we're very happy to be able to say that we have posted significant revenues for the quarter, 8 million for the quarter, which are more than what we've posted for a full year in recent memory. So we're very, very happy, very, very proud of it, George. Thank you very much.
So let's go into some specifics. Look, we want to cover revenue, how we got there. We want to cover net income, your balance sheet. Why don't you take us through what you think are your priorities and what you want to go through first?
So George, this is the first time I'm doing this. So I believe I have to keep it to what we published. And I'm not a financial advisor. I'm not an accountant. I'm going to point out things that I believe are important to me as who runs the company. So I like to share that with people. But people should seek counsel. If they're going to make any decisions based on what I'm saying, they should go and ask some advisors. And again, the financial statements and the MD&A are complete documents that should be read in their entirety. I don't have the time to go through every bit of it, but I'd like to point out a number of things, if I can, to help clarify.
Because it's not just the numbers; you want to have the context of those numbers.
That's right. So yes, we start off with historic revenue. Very, 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 very proud of it. We have some expenses that get us to our net income. Very basic. And then we have our net income also being affected by our strategic investment in HPQ. One of the things that you should know that is in the expenses this particular quarter is an expense item that is referred to as
share-based compensation.
Thank you, share-based compensation. Okay. Now, what that is we basically, in the course of the quarter, gave employees direct options. That's not an expense necessarily. It's a non-cash expense.
Right.
So when you're looking at a quarter, it's a strange thing that took place in the quarter. But how the accountants account for it is they consider it as if it was part of their salary. And so they go through a very complicated Black-Scholes model, and they attribute a value to it. So in this particular quarter, they attributed something to between $2 and $3 million of value to it. So when you take that out of the quarter to get a sense from an accounting perspective, if that wasn't there, what does the quarter look like from an operational perspective? You find that from operations, we made about $3.1 million.
Good point. And
And so
it's not like that's going to be happening every quarter either. I guess
Exactly.
last quarter was the quarter where you said, hey, let's start rewarding everyone for the great work and all the success we've had.
Exactly. So what I'd like to do is, if I can, I'd like to share my screen here
Sure.
and actually point that out into some detail.
Yeah, I love the fact that we're doing screen sharing now in real time.
So there we go. This is the 3-month revenue. You can see here there's $8 million of revenue.
Yep.
And then you go down and you see expenses and selling, general, and administration. In that 5.3 million is is the amount that I explained to you before. So what I do actually,
yeah, about $3.1 million in share-based compensation.
it's I think it's I'm gonna just get it here. I think it's here. So what we've done in the management discussion, we've broken out some selected financial information again. So what we've done is we've broken out again. Again, we have the same revenues, but in the expenses, we've taken out the share-based compensation. And what we do is we look at our net income from operations, not including that share-based compensation, ends up being 3.1 million. And that for me is a key takeaway. Then you take away the share-based compensation, you get back to the net income again of 105. And then, so we put in this extra line, and that can be found in the MD&A, I think around the page 3 or so. And you can see how that works out. I think that's important takeaway from this particular income statement.
Right, because a couple of people did point out, they said, hey guys, I'm a little concerned that net income from operations is only $105,000, but
yeah,
that's a big piece of information there.
It's something that now you can't really start selecting what expenses you're going to take out, and
of course,
you can't. So from my perspective, operating a company, or when I look at companies, I actually look at cash flow. Now you go to page 10 of the MD&A, and what we try to do is give you a sense of what cash flow is here.
Right.
Okay, and it's right here on this page here. I'm going to just try and go up here a bit. Summary of
cash flow is such a most people don't look at cash flow. Everyone looks at the top line numbers, yeah, revenue, net income, but cash flow really tells you a lot about the health of a company at the end of the day.
What this does for me, and I'm not an accounting guru, but what it does for me, it just breaks down very simply: cash is king. And the summary of cash flow breaks down where the cash flow is used or provided for by operations, investment activities, financing activities. So when you go to the key one that my takeaway is on operating activities. What is your operations doing? Are they really kicking off cash? And when you look at the trend here, in the quarter, we kicked off $2.4 million of cash versus a use of funds of about $848,000.
Yeah, that was a cash flow deficit,
yeah,
for the quarter last year of 850 grand, essentially.
This, for me, operating the company indicates to me my operations are kicking off cash. And then what I do is this just an anomaly in this one quarter? Something happened? No. When you look at 9 months, we're kicking off 1.6 million versus a loss of 2.8, not a loss, a use of funds of last year of 2.8 over the same period. So for me, as a CEO, and I'm running this company, I say, okay, after the accounting is done, it's very difficult to understand financial statements, but cash is kicking off these operations. I get a lot of comfort from it. So, yeah. So that's on page 10 of the MD&A. And the other one that I shared with you a few moments ago was also in the MD&A, selected financial information, which is I think in page 3 or so. Those are two key documents that we provide in the MD&A to try and clarify what's happening in the quarter. Now, Also impacting earnings was the effect our strategic investment in HPQ had. So for those that know or are new to the story, we also own shares and warrants in a client of ours called HPQ.
HPQ Silicon.
Yeah, so it's a strategic, we call it a strategic investment because of the association, to try and we use the word strategic to try and underscore the fact that it's a close relationship. Now, it's very different, George, this particular line item because of the relationship. And there's no other way to account for it so it becomes clear. In fact, our investment in HPQ was actually in operations at one point. It was in their finance, but we pulled it out of there so and investors could have a clear understanding of how our operations are separate from our investment. But it's different from an investment. Let's say we had in Coca. Let's say we had an investment in Coca-Cola.
Yeah, or a private company like a Gorecom, and I told you, hey,
or any other public
higher.
company, and that company's operating separately and they're doing good things, and we luck out because quarter to quarter there's a difference, and we luck out, and bango, there's a contribution to earnings per share. This is extremely different. It's our personnel that are in the operations, our facilities. We were the seed of the patents and the technology. So we're very closely related in terms of operations and success. So the success of HPQ, we believe, has a lot to do with how we operate. So I don't think it's something that can be discounted willy-nilly as, oh, it's just a strategic investment. It depends on what that other company does. Yes, but it's like we're
well, the difference, I think, Peter, is you're intimately involved in the success of that investment. In other words, your contribution to the success of HPQ today, this quarter, next year is integral to it, as opposed to you're a passive investor and you just happen to luck out and you have no idea as to whether your investment in Gorecom this quarter skyrocketed, but next quarter may drop like a rock because you have no control over it. But with HPQ, you're the company is intimately and intricately involved in its success. And should investors be reading something into that you've taken it, that you now put it into the taken out of more of the investment side and put it more into the operation side? Because
no, we did it.
That's progressing.
Many. I can't remember. A couple of years ago, we decided to take it out of the operations and put it as a separate line item below, and that's where it should be, because it's not part of our operations per se. But then again, it's not as distant as if it's a separate public company like Coca-Cola or something that we invested in. So that's something that. And it was a strategic decision, and it's panning out. And I think it's actually something that, it affects earnings per share, and that's the takeaway. The other thing I wanted to speak to was, if I could, is the balance sheet.
Of course, balance sheet's a signal of company strength.
Yeah, it's one of the things I'm extremely proud of. If I can, I hope I'm putting it up, the right one up here. This is, yes, I am. Yeah. This is, no, let me just go back up 1 second. That was the income statement. So the balance sheet is, here we go. This is the balance sheet. What we press release, and some people may say, well, look at cash is here, $2 million. You press release, you have cash on hand. At the time of the writing of the press release, we had cash on hand of 17 million. And the reason we felt that was important to talk to was because subsequent to September 30th, we had the funding, the financing, and it contributed, as well as other cash coming in. So we have a cash on hand of $17 million. And we've cleaned up our balance sheet. Before we had a convertible debenture, down here, note 12, down here of 2.98, is now gone, as well as other notes and term loans are gone. So we've really cleaned up the balance sheet. And I like to speak to this number here called billings in excess of costs and profits on uncompleted contracts.
Yeah, that's a big one.
Now, it's a little bit complicated because it's an accounting anomaly. And I'm not talking about our company, but a lot of people misunderstand this to be a liability like a telephone bill that needs to be paid. Okay, if the music stops, it needs to be, most liabilities need to be paid. Now, if people understand what this is, and they bring this understanding to other companies that are public, they may have an interesting opportunity to make money where people think this is a true liability when it isn't. And I'll explain. How we account for revenues is based on the accounting principle of percent complete. It really has nothing to do with when we receive money, believe it or not. So take a project that's got revenues coming in of, let's say, $1 million, and expenses, and then it has a profit. If you are 25% complete, you're allowed to bring in 25% of the revenues and the expenses into your profit and loss and into your income statement. If you're 75%, you bring 75%. Now, remember I said it has nothing to do with when the cash comes in. How does the accounting principles take into account different scenarios? So let's say the two extremes. I get paid everything up front, the full $1 million up front, or I get it all at the end. Let's take those two extremes. When I'm 25% complete, it means that on the $1 million project, it means that I can account for 25% of the revenues and expenses. But I've collected 100% in the example where I collected everything up front. That means I've collected 75% more than I should have. That goes into a liability.
Because you still got to deliver the rest.
Yes and no, because you have to understand the client, on the other hand, on the other side, is paying. I took two extremes, but what actually happens is as the contract is progressing, he's paying for things. He's paying for, this much of a completion, the design. The client feels as if they've paid for these things. Okay, he doesn't know what percent completion is. He doesn't know that there's the counting structure has put his advance payments into these liability. He thinks he's paid because a milestone has been reached. Okay, so on the other side of the coin, if you're paid at the far end, it's actually an asset. So here's really a strange situation. You have two companies, let's say, that are doing exactly the same thing. One person gets paid in advance. It shows as a liability. The other one gets paid at the end. It showed as an asset. You as an investor are looking and saying, oh my God, this client over here has an asset. This one has a liability. I like the one with the asset. But what's actually happening is the guy with the asset hasn't collected yet. The guy with the liability is collected early. And somebody actually has described this billings in excess of liability. It's actually guaranteed future revenues, because on a percent complete, you've already got the revenues in, you've already got the money in. So it's pretty cool. It's an anomaly in accounting that has come from the days of Enron. Look it up, ENRON, back in the days when people were really screwing around with revenues, and what they tried to do is standardize it in such a way that it reflects what's happening and there's less likelihood that people are going to be screwing around with revenues and misrepresenting to investors. So this billings in excess is actually reflects the fact that we've actually collected faster than we've completed, which is what you want in a company.
Sure.
However, the client doesn't know that. The client doesn't know that he's paid in advance. Sorry, HPQ, or whoever's out there, US Navy and everybody else. But that's the way we run our shop. Okay. Now, when you're looking at financial statements, we might say, well, then you should have the cash up above to complete the contracts. And yes, technically speaking, you should. That's another conversation, because small companies, they go to banks or they go to the market to raise capital. So if somebody's funding it out of this, it's probably the best thing they could do to not have dilution, things like that. And that's another story. And that's just my personal opinion. But what we have right now, George, is a very clean balance sheet. The debt that is conventional debt, like loans, term loans, convertible debentures, have been paid off or have been converted in full. We have $17 million on the balance sheet. Our strategic investment is doing very well. And so that's what's not here and is in the press release or in the notes somewhere. I think it's in my forward-looking statement. Is also what's not captured here is our net. We have carry loss.
Carry loss forwards, yes.
Carry loss forwards. I think it's like, I can't remember. I think it's like over $50 million. Check it. I can't remember what it is. That means that we'll be able to shield some of our future income, our profits, from taxes.
That's right. That's right. What is the size of that carry forward, of that loss carry forward?
I got my notes here. If you just give me a second, I'll tell you. It's in the forward-looking statement. Not forward-looking statement. It's in my Outlook. I don't have it here.
Yeah, because in the meantime, well, at least for Pyro investors, all these years, who the loyal ones, they've been there for the losses, and they've absorbed those losses. Now those losses are actually going to be shielding income. So now they're going to be benefiting from those losses.
Yeah, I'm just going to look here and see if I have it here. I should have it. 50 million. The company has over 50 million tax loss carry forwards, roughly evenly distributed between federal and provincial obligations. So that's what I just looked up.
All right. Well, there's a real significant value to those. That's for sure.
Yeah.
Real significant value.
So that's it in a nutshell. How I look at.
Sorry, Peter. By the way, that'll show up in the annual though, because you don't put those in the quarterly.
Oh, what I did was it's in my it's my Outlook section of the MD&A. It's the last section of the management discussion. I think it's the last paragraph or second to last paragraph.
But the impact of it on a statement will show up on the annual statement when you prepare.
It doesn't show in the statement at all.
Oh, okay.
It's in the notes. It's in the notes. It's in the. I think it's in our tax filings. It doesn't show up anywhere as an asset or a life.
Because I've seen it before on the income statement where George Co makes $100 minus loss carry forwards, protect, and then it's but anyways, if it does showing up there, then that's
I don't think
we know where to look for.
I may be wrong. I don't think so.
Yeah, no, you're
I could very well be wrong, but I don't think it is. No.
So let's talk about a couple of questions I have for you. The 10 cents per share in earnings, which is great for the quarter. Is that something that investors can start to almost extrapolate going forward? I know, again, you haven't given guidance yet, but should be the extrapolating this is the beginning of these kind of quarters going forward, given the backlog?
I can't comment to that, George, what investors should do. I mean, it's what we've done in the quarter. We haven't given guidance yet because I've just been so busy. I haven't sat down with my project managers to see how percent complete they've gone through the fourth quarter and what we're projecting out. Hopefully, I'll be able to give some guidance soon enough.
That was the question I was going to ask.
I want to try and give guidance, and I'm new to this, so I want to try and give guidance without meet the guidance or exceed it. I mean, that's the goal, right? That's the goal to try and get as close to what we're going to do as soon as we know we're supposed to. I think legally give guidance if we're pretty sure we're going to do it. So I can't comment on what investors should do with this information. I just run the business and talk about it, and the investment community has to figure out what they want to do with it. That's not my job.
Another question I have for you, perhaps, and this is something that you might have come up while you're doing your financing. Do you have a sense for independently what the average multiple is for companies like Pyro?
I have my own opinion. I can't talk to it here, George. It's not my
Right.
place to talk to it. I don't think I'm allowed to.
No, fair enough.
It's I don't think I can talk to that, George.
Yeah, at some point, maybe, who knows? Sometimes when companies put out their investor presentations, they'll provide a peer analysis and comparison, revenue multiples, income multiples. But just in case you guys had that, I figured why not ask? Because I know people are kind of thinking about. I've seen the chatter online, which is what multiple do we put on this? And there's great debate out there. Is there a standard multiple, more of an industrial company? Do we put a peg rate multiple on it because of the growth? So I figured I'd bring that up so investors know that we're listening. But if you can't answer it, that's fair enough.
So if you, I could actually, I don't know. I don't know what to advise.
Nope, fair enough.
Running. I think we're a unique company, George. And I'll tell you why. I mean, when you're looking at what company you want to follow, or just read about if you want to get excited about it. Now, forget about investing. I mean, some people just like reading about companies. I mean, I'm not so sure there's so many companies out there with so many relationships developed in so many markets. I mean, how do you? I'm glad I'm not an investor that has to figure that out, because I think we're unique in that respect. We're very unique. And what multiple you apply to that is, good luck to you to figure it out.
There are very few companies, if you remember when we first started talking, when we first started, doing interviews, I said that PyroGenesis was like you're like the Elon Musk of the small cap world, because you have technology that you are succeeding on multiple applications.
George, he's the
so few
Peter
companies
Pascali
are able to do that ever.
Companies, George.
What's that?
He's the Peter Pascali of large cap companies.
Exactly.
Great, okay.
But that's the idea, right? When you're succeeding on so many applications globally, it's a good problem to try and figure that out. That's the good news.
Yeah, I mean, and oftentimes, people ask us, they say, listen, not about PyroGenesis, but just about people ask some finance about just investing. I mean, like, what's your risk profile? If your risk profile is a certain thing, it doesn't matter. You go invest in a bank, and then if your time frame is 2 weeks, then you go invest in a different type of company. So I think you also have to figure out if you're in a particular risk profile and you're looking at this different companies and you're going to take your money from one and put it into another. Is it worth it? Is it worth going to the new company because they got more opportunities? Is it worth taking it out of that particular company because where are you going to put your money after this, where there's similar or better opportunities? So I think maybe I've even gone a little too far in talking about this, but it's so individual. It's really individual in terms of and what their risk profile is and what they have as alternatives that another investor may not have or know of.
Sure.
It's very difficult to peg that. So that's it.
Question. You attribute some of the success, and then from successful processing of backlog. You say that in the press release. Are your closing times getting? Is your deal closing getting easier? Are the closing times getting faster? Can we infer that from this? Because it seems like you're going through your backlog, quicker.
No. We're just saying that we're processing our backlog, which is generate these revenues. I mean, and I think we post our backlog as of the date of the press release, as opposed to September 30th was, I think, something north of 35 million. I think it was 36 million or something.
36.4.
Yeah, 36.4 million. So that's what I'm trying to explain to people. I'm trying to explain to people you shouldn't be so surprised, because we've got a backlog that we're running through, and it's got to come through every quarter. So that shouldn't be a surprise. And we're successfully doing. In other words, if you're not doing it successfully, it means you come to a hiccup and there's a delay, so you can't % complete as you thought you might for some reason. So that's the only thing that would affect us, is if as we're processing the backlog, we come to a hiccup. We can't process it because we're waiting for something. But so when I say we're processing it successfully, it means there's no hiccups in the backlog of the % completions.
And last question I wanted to ask you was gross margin. That exploded. what do you attribute that to? Because it's up by 22.7%.
In the particular quarter, we had, I believe, we had some good high margin business coming through there. We also had there was some IP that we sold to I think it was HPQ that had a high margin as well. Typically in this line of business, I believe that we're in, it's unique. So the first ones may have a lower margin, but as we increase our business, we should get higher margins because we're able to source better. We're able to source instead of buying one power supply, we're buying 10 type of thing. And
but these gross margins are high tech gross margins. That's something I want to point out. When you start getting upwards of 65-70% gross margin, you're not an industrial company. You're in the tech. You're on the tech side.
That's one of the things I consider myself to be. Yeah, well, of course we're industrial, right? We're industrial from that aspect, but we're a high tech industrial company. I don't know if that makes any sense. We're applying high technology to industry. So yeah, we're getting some nice margins. That's for sure.
Last word to you. Because I want to ask you more questions, but they would have to deal with guidance, so I don't want to put you on the spot. But by the way, for everyone at home, I was asking those questions because I could see those on Agoracom and other forums, so we figure let's at least put that out there. So I appreciate that you addressed it, even though you couldn't answer it specifically. Last word to you. How should everyone feel about what they're seeing in with these results? And how should everyone feel going forward? Just generally speaking, I'm not talking about stock price or projections.
How can you not feel good? I mean, the company at the beginning of the year was saddled with debt, was not operational profit from an operations perspective. People are wondering why the hell are you investing in HPQ at 12 cents when things at 8 cents? I mean, it's and we're not done with the year. And we have a clean balance sheet. We got cash in the bank. We had a bought deal. We're uplisted. How could anyone not feel good about it? I mean, no matter what you think the future, we're doing what we're supposed to be doing, for crying out loud. And I think that the team is doing a phenomenal job here. So
yeah, and I have no doubt that 99% of people feel great about it. But look,
if anybody can connect those dots in a bad way, they need some medicine.
And I'm gonna take note of something you said there. The year's not over yet, so I'm not gonna ask you about that.
No. I didn't mean to infer that. I didn't mean to infer anything. No. I'm just saying we did it in shorter time than a year. It's I'm not just being actually. No, we went from 7 million in backlog last year to 20 million, and people were wondering, well, can he keep it up? Can he keep it up? And all of a sudden we're at over 40 million. And then we add 8 million in revenues in the quarter, and we're still at 36 million in backlog. It's humming along. Cross fingers. There's things in the environment like COVID and things like that. We've been blessed from the sense that our supply line seems to be good, our clients seem to be good. We at the company are healthy, and we seem to be working well. So and we did this all during COVID. That's the other thing that we were pulling this out during COVID. You're asking me how I am. I'm ecstatic.
Last question I have for you, for my purposes, can I take a day off tomorrow? Or am I going to have you back on?
That's insider information. I can't give you that.
I love having these conversations, Peter. More importantly, everyone at home loves watching and hearing what you have to say. And you pointed out some really great stuff in the financials there that were beyond just a top line app. So congratulations again to you and the team. Thanks so much for coming on.
Thanks a million. Good to be here. See you soon. Don't infer anything into that. It's just a polite thing to say to someone when you're leaving.
You are E.F. Hutton now. Do you remember the E.F.? I know you do because we're older. The E.F. Hutton. Remember those commercials back in the day when E.F. Hutton speaks and everyone in a restaurant would.
Oh yeah, that's right. Yeah.
So you are Elon Musk and E.F. Hutton at the same time.
Why can't I just be Peter Pascali, George? Why do you have to? I'm Peter Pascali. There's nobody like me. That's the weird thing, right? So that's it. No EF, no Elon Musk. It's Peter Pascali. Okay.
In Peter, we trust. You're
All the
100%.
best, man. Have a good weekend.
You've been watching or you've been listening by podcast on Spotify, Google, or audio podcast to Peter Pascali, President CEO, PyroGenesis Canada, trades on the TSX under the stock symbol PYR. And for our friends in the US, PYRNF. Hope you all enjoyed the information you got out of this. And again, for our American investors and friends, have a happy Thanksgiving. Have a great holiday long weekend and a great day to all of you. See you next time.
All the best.